In this video with My New Market's Amy O'Connor, Henry Veguilla, Vice President of Marine Distribution for Liberty International Underwriters Marine Division, discusses the results of a recent survey conducted by LIU Marine, including what marine risk managers identified as their current insurance concerns and what the marine market needs for the insurance industry to help manage their risks.
We felt it was important to do it now because a number of things have been happening in the industry in the last several years. Really three things. One is weather. So a lot of these energy companies operate in the Gulf of Mexico. They're exploring for oil. The marine industry insures that exploration, vessels that are supplying them, things like that. So in the last several years, we've seen a lot of weather-related events come on more frequently and more severely, causing more losses to the industry and creating more risk for them, for these risk managers. And then onshore, there's a lot of things that have been going on with new technologies that have allowed energy companies to extract more energy from the ground, like fracking. And there were two other things as well. Technology, a lot of technology has been changing, allowing these companies to explore for energy in ways they couldn't do before. And then on top of that, the government has been involved more. So there's been more regulatory and compliance pressures put on these folks.
Veguilla says the survey gave them great insights into what are the current concerns of marine risk managers.
Some of the important things that came up were, one, as a concern, that business interruption and disaster recovery is something that they feel they need to be more prepared for. They want to get better at doing that. And they feel that insurance carriers have expertise and knowledge to help them work through those things, okay? Another thing is reputational risk. So there's rising anxiety on the parts of these risk managers around when an event happens, like for example, the sinking of the Costa Concordia in Italy, the cruise ship, or the well, the BP well that blew up in the Gulf of Mexico. When things like this happen, not only is there harm to human life and to the environment, there's harm to the reputations of these companies. So they also feel that they can get better at understanding how to manage and communicate when these things happen so that they can mitigate any damage to their reputations. There were a couple of other key concerns. Okay. One of them was they felt that they would expect insurance companies like us to do a better job at explaining to them how we price our product. So when we do lay out for them what their coverage is going to cost, they feel like we could probably do a better job at laying out how all the pieces fit together so they have a better understanding of how that works. And the other thing they mentioned was they would want us to be a little more innovative in how we offer our coverages. So for example, the regulatory and compliance risks that they face, they would like to see if insurance companies can come up with ways to help them cover some of those costs as well.
Veguilla says marine risk managers also indicated how the insurance industry can help them manage their risk and how the industry could be more of a partner long-term for this class.
A couple things came out in terms of solutions and recommendations. Some things that we've already known for a long time that the survey validated. Risk managers really in this space, it's a very complex kind of coverage. So they see the underwriter, the insurance company, as an extension of their risk management departments, which means that they see us as partners. So they want to see and they believe in long-term relationships. So at LIU Marine, we invest a lot of money having engineers on staff that really understand these companies, the businesses they're in. So when we do put together a package to protect their risks, we really understand for the long term the risk they're facing. So it's not, let me buy an insurance policy this year, I didn't like the price, let me go shop around next year and get the cheapest coverage. Both sides agree that that would be a terrible way to do this kind of business. So we're both invested in very long-term partnerships. So that's one thing, more collaboration, okay? They see a lot of value add from our engineers getting involved with them, going on site, understanding their businesses and making recommendations to them on how they can better manage their risk and reduce their losses, okay? Another area is coverage, is getting more innovative with expanding coverage, which is something they're challenging us with, and we are looking into ways that we can then think a little bit more out of the box so we can provide better coverage for them.